Welcome to my channel. In this class, I had included plus one accountancy, objectives of accounting, and the role of accounting. Objectives of accounting. What is the purpose of accounting? First one is maintenance of records of business transactions. By transactions, we mean the exchange of anything of value between two or more firms. Accounting is used for the maintenance of a systematic record of all financial transactions in the books of accounts. Even the most brilliant executive or manager cannot accurately remember the numerous amount of various transactions taking place, such as purchase, sales, receipts. Receipts means the cash coming into our firm, payments, that cash which goes out, that take place in business every day. Hence, a proper and complete record of all business transactions are kept regularly. Moreover, the recorded information enables verifiability and it acts as a evidence or proof. Second one is calculation of profit and loss. The owners of business are keen to have an idea about the net results of their business operations periodically. That is, whether the business has earned profit or incurred losses. This another objective of accounting is to ascertain the profit earned or loss sustained by the business during an accounting period, which can be easily worked out with the help of record of incomes and expenses relating to the business by preparing the profit or loss account for the period. Profit represents the excess of income over expenses. If the total revenue of a period is 6 lakhs and the total expenses are 5 lakh 40,000, then the profit will be equal to 60,000. That is 6 lakhs minus 5 lakh 40,000. If the total expenses exceed the total revenue, the difference will be loss. The next objective is depiction of financial position or showing of financial position. Accounting also aims at ascertaining the financial position of the business concern in the form of assets and liabilities at the end of every accounting period. A proper record of the resources owned by the business organization, which is known as assets, and the claims against such resources, that is the liabilities. Liabilities means the amounts that we have to pay to others. Facilitates the preparation of a statement known as the balance sheet position statement. The financial position of a business can be ascertained through checking the balance sheet. Providing accounting information to its users. The accounting information generated by the accounting process is communicated in the form of report statements, graphs, and charts to the users who need it in different decision for making different decisions. There are two types of users: internal users and external users. Internal users mainly comprises of management who needs the timely accounting information on profitability, the cost or expenses incurred for the purpose of planning and decision making. The external users who comprises of investors, unions or employee groups, lenders and financial institutions, suppliers and creditors, then customers, government and other regulators, social responsibility groups, competitors. The investors and potential investors. Potential investors means those who are wanting to invest in our business. They seek the accounting information on the risk and return on investment to understand about the risk and return on their investments. Union and employee groups, they need the accounting information for setting the stability, profitability and distribution of wealth within the business. Then the lenders and financial institutions, those who lend or give money to us. They check the accounting information for the purpose of assessing the creditworthiness of the company and its liability to repay the loans and pay interest. Then the suppliers and creditors. Suppliers are those parties who supply raw materials to our firm. The creditors are those persons from whom we buy some materials on credit without giving cash. Credit means we are giving the cash on a future date. They check our accounting information on ascertaining whether the amounts owed will be repaid when due and on the continued existence of the business. Customers, they seek the accounting information for the purpose of the whether the business is as a continuous existence and thus the profitability of the continuous supplies of products, parts and other after sale service. Government and other regulators, they check the accounting information to ascertain whether the firm has the capacity to pay the taxes on time. Social responsibility groups, they check the accounting information such as information for ascertaining the impact on the environment and its protection. The competitors then know they check the accounting information on the particularly on the relative strength and weakness of their competition and for comparative purposes for comparing their business firm with our business firm. Whereas the above categories of users share in the wealth of the company, competitors require the information mainly for strategic purposes. Strategic purposes means for development or for improving their business. Role of accounting. For centuries, the role of accounting has been the changing with the changes in economic development and increasing societal demands, social demands. It describes and analyzes a mass of data of an enterprise through measurement, classification and summarization and reduces those data into reports and statements which shows the financial condition and results of operations of that enterprise. Hence, it is regarded as the language of the business. Language, we use language for communication purposes. Hence, the business use accounting language for communicating their financial information to the users. It also performs this service activity by providing quantitative financial information that helps the users in various ways. Accounting as an information collects and communicates economic information about the enterprise or to a variety of interested groups. However, accounting information relates to past transactions and quantitative and financial in nature. It does not provide qualitative and non-financial information. Qualitative information, as you say, it does not showcase the efficiency of the laborers working in a firm. These limitations of accounting must be kept in view while making use of accounting information. There are some small questions for your doing. Here it is given. Test your understanding. And here it is another one. Okay, that much. So go through these problems and do the questions. Okay, that's all for today. Thank you.